Welcome back to the Pro Ticker Podcast, your Monday morning edition covering major financial magazine headlines, everyone.
Always an exciting time to see what's shaking things up.
It really is. We've got a whole stack of reports this morning from Bloomberg, the Wall Street Journal, MarketWatch. The whole gang's here.
Well, let's dive right in then, shall we? Where do you want to start?
Let's start with some of the global economic news. I think that's been kind of dominating the headlines lately.
Sounds good to me. There's certainly a lot to unpack there.
There is. There is. I mean, one of the things that really jumped out at me was this report from Bloomberg about Germany's economy. They're actually projecting a contraction for the second year in a row.
Yeah, that's a pretty big deal, you know? It makes them the first among the G7 nations to report a double-dip contraction.
And Germany's often seen as like the economic engine of Europe, right?
Right, exactly. So this is definitely raising some eyebrows. People are starting to wonder if this is a sign of things to come.
Like, is it just a German problem? Or is there something bigger at play?
Well, I think that's the million-dollar question, isn't it? The Bloomberg article points to a number of factors that are specific to Germany, like high energy prices, weaker global demand, kind of the usual suspects.
But it sounds like those are issues that are affecting a lot of countries right now, not just Germany.
Exactly. And that's why I think people are paying such close attention to this. It's like, is Germany the canary in the coal mine, so to speak?
That's a good analogy. And speaking of canaries, I noticed that Bloomberg also had a report about the UK and how their economy is showing some similar signs of vulnerability.
Oh, yeah, absolutely. They're facing a lot of the same headwinds as Germany. And there's even talk of another potential slump for the pound sterling.
So it sounds like what's happening in Germany is not just an isolated incident, but potentially part of a broader trend.
I think that's a fair assessment, and it makes you wonder what the knock-on effects might be, for the rest of the world.
That's what I was thinking. It's like one of those domino effects.
It is. And speaking of interconnectedness, I was reading this piece in the Wall Street Journal that was talking about how the U.S. economy, which is still pretty strong, is actually contributing to some of these global pressures.
That seems kind of counterintuitive.
Yeah?
How can a strong U.S. economy be a problem for other countries?
It's a little complicated, but it all boils down to bond yields.
Okay, for those of us who don't live and breathe finance, could you explain what bond yields are and why they're so important?
Sure. So bond yields are basically the return you get for lending money to governments. It's like the interest rate on a savings account, but for governments.
Got it. And what does this have to do with the U.S. economy?
Well, when the U.S. economy is doing well, investors tend to feel more confident putting their money into U.S. bonds.
Okay, so it's kind of like a popularity contest for bonds.
In a way, yes.
Right.
And when the demand for U.S. bonds goes up, the yield goes up too.
Makes sense. So how does this affect other countries?
Well, here's the thing. As U.S. bond yields rise, they become more attractive compared to bonds from other countries.
So it's like investors are saying, hey, I can get a better return in the U.S., so why bother with bonds from other countries?
Right. And when that happens, it can pull money away from those other economies, which can make it more expensive for them to borrow money and potentially slow down their growth.
So it's like a ripple effect, right? What
Actu-
happens in the U.S. bond market can have consequences for economies all over the world.
Exactly. And it's not just about the flow of money. Either rising bond yields can also make it harder for central banks around the world to stimulate their own economies. You see, when central banks like the European Central Bank or the Federal Reserve want to boost growth, they typically lower interest rates to make borrowing cheaper. But when bond yields are already high, those efforts become less effective.
It's like they're trying to push a boulder uphill.
Exactly. It's a real challenge.
Yeah.
And then there's the whole issue of inflation, which is also playing a role in these rising bond yields.
Right. I remember we were talking about that earlier, how some investors are worried that certain U.S. policies could lead to higher inflation down the line.
It's all connected. You see, when inflation rises, the value of those bonds erodes. So investors demand higher yields to compensate for that risk.
So it's kind of a self-fulfilling prophecy.
Yeah.
Fears about inflation can actually drive up bond yields, which could then lead to more inflation.
That's the worry, yeah. And on top of that, there are concerns about the U.S. federal budget deficit, which is basically the difference between what the government spends and what it takes in.
Right, right. And how does that tie into bond yields?
Well, when that deficit grows, investors can get nervous about the government's ability to repay its debts. And that nervousness can push up bond yields as well. It's like a risk premium.
Got it. So it seems like the bond market is sending a pretty clear signal that there are some underlying anxieties out there, huh?
Oh, absolutely, yeah. I mean, MarketWatch even had an article with this headline, "Stock market investors are getting nervous about this bond market move that's only happened twice in over 40 years." So yeah, people are definitely paying attention.
So how does all this bond market drama affect the stock market? What should investors be thinking about right now?
Well, the short answer is that rising bond yields can make stocks look less attractive by comparison.
How so?
Well, for one thing, when bond yields are high, it means investors can potentially get a decent return without taking on as much risk as they would with stocks.
So it's like bonds are suddenly looking like the safer bet.
Right, exactly. And then there's the fact that higher bond yields can also increase borrowing costs for companies, which can eat into their profits and make their stock less appealing to investors.
That's like a double whammy for the stock market.
Pretty much, the Wall Street Journal actually had a piece that pointed out that despite the strong U.S. economy, stocks have actually struggled in the past month as bond yields have climbed. I mean, the Dow Jones has been kind of all over the place since the election, and the Russell 2000, which tracks smaller companies, has fallen quite a bit from its high back in November.
So it's not all sunshine and roses, even when the economy seems to be doing well.
Definitely not. There are always these underlying currents and cross currents to be aware of.
Speaking of currents, I was wondering if we could shift gears a bit and talk about some international news.
Sure, where do you want to head?
Well, I thought this article in Bloomberg about China was pretty interesting. Apparently, some analysts are predicting a major rebound for Chinese stocks, which have been taking a beating lately.
Oh, yeah, I saw that too. Goldman Sachs is actually forecasting that those battered Chinese stocks could rise by something like 20% by the end of the year, which is pretty bold considering how much they've fallen.
That's what I was thinking. I mean, what's making them so optimistic?
Well, from what I understand, they're basically betting that sentiment and liquidity in the Chinese market will start to improve as the trade situation and policy clarity improves. They seem to be particularly bullish on what they call government consumption proxies.
I'm not sure I'm familiar with that term. What exactly are government consumption proxies?
Basically, it refers to companies that stand to benefit from government spending, like infrastructure companies or those involved in public services. The idea is that if the Chinese government starts pumping money into the economy to stimulate growth, these companies will see their profits increase.
So it's about betting on which companies will benefit most from government policies.
Right. And they're also recommending emerging market exporters, which are companies that sell their goods or services to other developing countries. They're basically betting that as the global economy recovers, demand from these emerging markets will pick up, which will benefit Chinese exporters.
So it's a two-pronged approach, betting on both domestic stimulus and global recovery.
Exactly. And it's not just Goldman Sachs that's feeling optimistic. Either Bloomberg mentioned that HSBC is also bullish on Chinese stocks listed in Hong Kong, citing favorable policy rhetoric and a better economic growth outlook.
Well, it'll be interesting to see if their predictions pan out.
For sure. Time will tell.
Speaking of time, I wanted to touch on another story that I thought was pretty interesting. This legal challenge that Apple is facing in the UK over claims that they're making exorbitant profits through their App Store commissions.
Oh, yeah, that's a big one. It's a class action lawsuit, actually, with the potential to really shake things up in the tech world.
I was just thinking that it could set a precedent for how app stores operate in the future.
Absolutely. So basically, the lawsuit alleges that Apple has been abusing its dominant market position to overcharge users for app purchases and subscriptions.
And how much are they talking about here?
The claimants are seeking over 1.5 billion, which is about 1.8 billion in US dollars.
Wow, that's a hefty sum, even for Apple.
It is, and what makes this case so interesting is that it really gets to the heart of how much control Apple has over its App Store.
Mhm.
The claimants are basically arguing that Apple is acting like a monopoly, forcing developers to accept their terms or risk losing access to a huge customer base.
That whole walled garden approach that Apple is known for.
Right, exactly. And Apple, of course, is arguing that its commissions are fair and reasonable, that they provide a valuable platform for developers, and that their commission is in line with industry standards.
But the claimants are saying that Apple is using its control over the App Store to stifle competition and inflate prices.
Exactly. So it'll be really interesting to see how this plays out in court. It could have huge implications, not just for Apple, but for the whole tech industry.
It's like a David versus Goliath battle, but with billions of dollars at stake.
Exactly. And the outcome could reshape the digital landscape as we know it.
Well, from the digital landscape to a very real one. those devastating wildfires in Los
Yeah,
Angeles.
it's just heartbreaking to see the scale of the destruction and the impact it's having on people's lives.
Absolutely.
Yeah.
And MarketWatch had this report that was really eye-opening,
Yeah.
about how the fires are expected
Yeah.
have a significant impact on the already tight housing market in LA.
Oh, yeah, I saw that. It's going to be a real challenge, especially with so many people displaced by the fires and looking for places to live.
The article was saying that experts are predicting an 8% to 12% jump in rent prices across Los Angeles as a result of the fires.
And those numbers are on top of an already expensive rental market with very low vacancy
That's
rates.
like a perfect storm for a housing crisis, right?
It really is, yeah. And the sad thing is that a lot of people who are already struggling to make ends meet are going to be the hardest hit.
It's a reminder that these events, these natural disasters, they have a ripple effect that goes far beyond the immediate damage.
They really do. It's all interconnected in ways that we don't always realize.
Well, speaking of interconnectedness and ripple effects, I think we should circle back to the pound sterling, which we touched on earlier.
Yeah, that's a situation that bears watching, for sure.
Bloomberg is reporting that the pound is continuing to slide, and options traders are actually bracing for a potential slump of as much as 8%.
Wow, that's a pretty significant drop. What's driving that kind of pessimism?
Well, it seems like a combination of factors. We've already talked about the global economic slowdown and how that's creating uncertainty, but there are also some specific concerns about the UK, like high inflation and those lingering worries about Brexit.
Right, right. So it's like a combination of domestic and international factors all coming together to put pressure on the pound.
Exactly. And then there are concerns about some of Trump's policies, and how they might be contributing to global economic instability.
Yeah, I mean, the trade wars, the unpredictable behavior, all of that is definitely making investors nervous.
It's like that fear of contagion, where investors are worried that problems in one part of the world will quickly spread to others.
Exactly. And then there's the whole issue of the UK's high levels of government borrowing, which is also adding to investor anxiety.
So it's like a triple whammy for the pound.
Hmm.
High inflation, Brexit uncertainty, and worries about global instability.
Pretty much. And it's reflected in the options market, where traders are essentially betting that the pound is going to keep falling.
So it's not looking too good for the pound right now.
Not at the moment, no. But hey, who knows? The market is always full of surprises.
That's the truth. Well, I think we've covered a lot of ground here today, from the anxieties of the bond market to the complexities of the energy sector to the roller coaster ride of the crypto world. It's been a whirlwind tour of the global financial landscape.
It has. And it just highlights how interconnected everything is, How events on one side of the globe can have ripple effects that are felt thousands of miles away.
Exactly. It's all part of this intricate and often unpredictable web that we call the global economy.
And that's why it's so important to stay informed, to stay engaged, and to keep learning, because
Okay.
the more you understand about how the system works, the better equipped you'll be to navigate it.
Absolutely. Well said. Well, I think that's a great place to wrap up for today, but we'll be back tomorrow morning with more headlines from the world of finance.
Sounds good. Looking forward to it.
We'll see you all then.
See you then. It's fascinating, right? How what happens in one place can have such a big impact on the other side of the world.
It really shows how everything's connected, like a giant financial web.
Exactly. It's all about understanding those connections. So stepping back a bit, what are your takeaways from all these headlines?
Well, I'm struck by this idea of strength, but with risks. Like the U.S. economy seems strong, but there are these worries about inflation and interest rates making investors nervous.
Yeah, that's a great point. It's almost like walking a tightrope, trying to keep things balanced. On the one hand, you've got positive signs, low unemployment, strong consumer spending. But then you have inflation, potentially eroding that spending power.
And interest rates going up,
Yeah,
potentially slowing things down.
exactly. It's a tough balancing act. And then you add in, political decisions, which can throw everything off.
Right, like we were talking about before, those policies impact trade, confidence, everything.
It's a lot to navigate for policymakers, for investors, for everyone.
Speaking of navigating, any advice for listeners feeling a bit overwhelmed by all this?
Diversification is key, always has been. Don't put all your eggs in one basket, right?
Spread the risk.
Exactly. Stocks, bonds, real estate, even different markets too, not just domestic.
So not relying on any single thing, no matter how good it looks.
Right. And just as important, diversify your information sources. Don't just rely on one news outlet, one analyst.
That's where a show like ours helps, right?
Yeah.
Presenting different viewpoints.
Exactly. But even then, critical thinking is crucial. Don't just take anything at face value.
Informed, but also skeptical A healthy balance.
Exactly. Now, bringing it back to the specific stories, we talked about bond yields surging, stock markets being jittery, the pound struggling. Any other big takeaways you'd highlight?
The interconnectedness really stands out, right? How the strong U.S. economy, while good for them, is actually part of what's driving up bond yields globally. And that makes it harder for other countries to borrow money, potentially slowing their growth.
It's a domino effect for sure.
And it's not just economics. Political choices, social trends, even those wildfires in LA impacting housing, it's all connected.
Right. Can't look at things in isolation. Got to see the whole picture, like a forest, not just the trees.
Great analogy. So, yeah, seemingly unrelated events can have huge ripple effects.
Exactly. And that's why staying informed, being adaptable is so important.
Speaking of adapting, how are companies handling all this? We touched on Apple's App Store battle, but any other examples?
The energy sector is a fascinating one right now. Oil prices rising, partly due to, geopolitical stuff and supply worries. Companies are trying to ramp up production. But there's also that pressure to transition to, more sustainable sources.
So a balancing act. Meet the current demand while also investing in the future.
Exactly. Some companies are doing great, profits soaring. Others are struggling to keep up.
It's a microcosm of those broader trends, right? Challenges and opportunities all mixed up.
Precisely. And that idea of a changing landscape, it applies to tech too. Rising interest rates, slowing growth, but also huge potential for innovation.
Each sector's got its own unique puzzle to solve.
For sure. And that's why, for investors, doing your research is vital. Understanding those specific industry dynamics.
So it's complex, no easy answers, no crystal ball, but fascinating to try and make sense of it all.
I agree. And that's why we have these discussions, right? To help you stay ahead of the curve, make informed decisions.
Exactly. Now, before we move on to our last story, I wanted to touch on something you mentioned earlier, that sense of anxiety in the markets. Any tips for managing those feelings? Making rational decisions?
It's key to remember. Investing is about managing risk. There will always be ups and downs, no predicting every twist and turn. The long game matters most.
Easy to get caught up in the emotion, right? Euphoric when it's good, panicked when it's bad.
Exactly. But it's a marathon, not a sprint.
Love that analogy.
Yeah.
And don't get swept up in the hype, either good or bad. Do your research, talk to advisors, and decisions based on your goals, your risk tolerance.
Excellent advice. Now, speaking of staying informed, there's one more topic I want to discuss.
Okay, what's caught your eye?
Cryptocurrencies. They're making a lot of noise.
Ah, yes, the Wild West of finance. Bitcoin, Ethereum, all those digital tokens with those wild price swings.
It's been quite the ride. Soaring high, then crashing down. Makes you a bit dizzy just watching.
So what's behind all that volatility? Just speculation or something more?
Well, speculation definitely plays a part. It's still a young market, not much regulation. So rumors, hype, that fear of missing out can really drive those swings.
So partly a psychological game, people reacting to each other more than anything fundamental.
Right. But there are fundamentals too, like broader market sentiment. When investors are feeling confident, they're more likely to take risks on things like crypto. But when things turn sour, crypto prices tend to suffer.
So it's like an amplifier exaggerating the market's ups and downs.
Exactly. And then there's the fact that the crypto landscape itself is constantly evolving, new currencies, new tech, governments trying to figure out how to regulate it all. It adds a lot of uncertainty.
Sounds like a lot of potential, but also a lot of risk.
Definitely. Which makes it so fascinating.
Keeps things interesting, for sure. But for someone thinking about investing in crypto, what would you say?
Same principles apply. Diversify, research, understand the risks, don't go overboard. It's not for the faint of heart, high risk, high reward.
So proceed with caution, but with an open mind, too. Crypto seems like it's here to stay, even if its future is a bit murky.
I think that's a fair assessment. The technology behind it, blockchain, has huge potential. Worth paying attention to, even if you're not investing directly.
So watch it, learn about it, but with a healthy dose of both skepticism and curiosity.
Well put. That wraps up our deep dive for today. We covered a lot, from bond market jitters to energy transitions to the crypto roller coaster.
It's been a whirlwind tour of the financial world, showing how everything's connected.
And as always, we encourage you to stay informed, stay curious, stay engaged.
Now, before we go, something to ponder. We've talked about economic trends, political events, social changes, tech innovation. How might all those forces shape the future of finance? What new challenges and opportunities might we see in the years to come?
That's a great question.
We'd love to hear your thoughts. But for now, we'll leave you to ponder that.
Absorb the info, connect those dots, draw your own conclusions.
And join us tomorrow morning for another deep dive. More headlines, more insights, all from the world of finance.
See you all then. It really makes you think bigger picture, not just what's happening today, but where it all might be leading.
Exactly. It's about connecting those dots, seeing the trends. So as we wrap up, let's distill some key takeaways for everyone. We've covered a ton, but what are the main points you want people to walk away with?
Well, I think the biggest one is that interconnectedness we keep talking about. Things that seem totally separate can actually have huge ripple effects across the globe. The U.S. economy doing well can impact bond yields in Europe. Wildfires in California affect housing prices nationwide. Political decisions in one country send shockwaves through markets everywhere. It's wild.
It really highlights how we're all part of this system, whether we realize it or not.
Exactly. And that creates both risks and opportunities, right? These global challenges, inflation, geopolitical stuff, climate change, they're all complex. But within that complexity, there's room for innovation, for smart companies to adapt and grow.
It's about recognizing those opportunities and being ready to capitalize on them.
Right. And that leads to the third takeaway. Being an informed investor, don't just skim the headlines. Do your research. Seek out different viewpoints. Form your own opinions.
Take control of your financial well-being. Don't be afraid to ask questions, challenge assumptions, think critically.
Those are essential skills, especially in today's market. Now, any specific advice beyond those broader points for investors navigating all this?
Sure. What else should people keep in mind?
Diversification, always. We've said it a few times, but it's so important. Don't put everything in one basket. Spread it around different assets, sectors, regions. Build a strong foundation that can weather the storms.
A solid financial house.
Exactly. And know yourself as an investor. What are your goals? When do you need the money? How much risk are you truly comfortable with? Once you have that clarity, you can build a plan that suits you.
Like a personalized roadmap for your financial journey, right?
Exactly. And remember, it's okay to get help. If it feels overwhelming, talk to a financial advisor. They can give you personalized guidance, answer your questions, help you build that tailored plan.
It's like having an experienced guide for your financial adventure.
Exactly. And remember, investing is a journey. It's not about getting rich quick. There will be ups and downs. But stay informed, stay focused, and you can navigate those complexities and build a secure future.
Well said. That's a great note to end on. We've covered a lot today, but hopefully given everyone some food for thought.
I hope so. Keep exploring these topics, talking about finance, keep learning and growing as investors.
And join us tomorrow morning for more. New headlines, new insights, all from the world of finance.
We'll see you then.
See you all tomorrow.